Thanks, Armin. Well, CBDCs, I think, are in some shape or form an inevitable development. The BIS, based in the Bank for International Settlements, based in Basel, has said that 86% of central banks around the world are either piloting or researching the use of central bank digital currencies, CBDCs. That's been led by countries like China and other, but particularly because it's the second biggest economy in the world. They are, essentially now looking at a very short-term horizon for the rollout of the EUAN, and that brings with it a whole host of implications, which I think cryptocurrencies go some way, in fact, a long way, to addressing. First and foremost, coming out of the COVID campaign, there are major issues associated with privacy that have yet to be clarified by central banks around the world. And there is a school of thought that says CBDCs can really change the financial system. And I think when people are discussing that particular point, they're addressing the topic of de-dollarization,
right,
of which I personally don't buy that argument. I mean, I think that the financial system, the dominance of the dollar in the financial system is going to be very difficult to shift. But the fact that central banks essentially could overhaul the correspondent banking system could be a significant development with serious implications for the dollar in the global financial system. But first and foremost, I think that cryptocurrencies, and we've seen a major, possibly the mother of all U-turns in the last week by Larry Fink, the CEO of BlackRock, who I think oversee something like $9 trillion in assets under management.
Yeah, he likes crypto now.
They are literally omnipresent. It was a few years ago that he said, if you're interested in Bitcoin, you're essentially interested in illicit finance and associating yourself with money laundering. It was just this week, I think, correct me if I'm wrong, that he said, Bitcoin is now saying that Bitcoin is a digital gold. We've seen, and he's unleashed a stampede for a number of asset managers to embrace spot Bitcoin ETFs. They're trying to convince the SEC that now is the time. The SEC, of course, is incredibly hawkish towards crypto assets, digital assets per se. So there are two points here. The first one is that cryptocurrencies, the argument needs to be amplified that they are a mechanism to address the 1.4 billion people around the world that are unbanked. That's not me saying it. That's a figure by the World Bank, in fact. There are recent statistics on that have no access to financial services, that by virtue of using a Bitcoin, Ethereum, or possibly an XRP from Ripple that can transact in real time at a fraction of current costs. It's suddenly, you're talking about leveraging and upgrading people's lives potentially, just because of the they have access to basic financial services
and access to maybe job opportunities as well. Because like one thing that we, for example, struggle. I'm a big believer in remote and global talent, but like how do you actually make payments? Right, like international payments is nearly impossible in 2023. That's it's quite crazy actually, if we think about this. So the opportunities are endless on this.
And of course, the reason why there's been a lot of pushback for that, doing something for the greater good, is obviously it's going to hurt traditional financial institutions. Conventional banks are going to suddenly have to deal with the issue of disintermediation. In other words, the correspondent banking structure as we know it is under major threat. In fact, there's no necessity for it through this mechanism, and that's why I think we see a lot of pushback against that. But secondly, that the cryptocurrencies also will be a counter to this, what looks like an inexorable march towards the potential retail use of central bank digital currencies. And what I mean by that is that you and I that have a retail bank account could be, how can I say, I don't want to say forced, maybe coerced into using them for a certain amount of transactions. That brings on clear issues of privacy, confidentiality, and also the ability of a third party, a disingenuous third party, whether it's the bank and possibly even the government or an intelligence service, for whatever reasons, to suddenly turn your financial taps off. So there has to be a counter to that inexorable march towards centralization of yours and I's financial activities. And of course, I'm not saying that illicit financial activities should not be controlled, that there are ways, but CBDCs cast a very long shadow over personal liberty. And when you look at the speed with which China is moving to rolling out its own CBDC, alongside its current social credit system, which is getting a lot of attention now from Europe and the US in terms of its use. They are issues that we should all be concerned about. So why I think that the cryptocurrencies, and I'm have a little bit of hope that comments by major asset managers are now realizing that the currencies like cryptocurrencies like Bitcoin are now beyond the control. I mean, no matter how much the SEC, and I suppose the US under the Biden administration has been very hawkish towards these cryptocurrencies, as has many other jurisdictions, but now jurisdictions like Hong Kong, Singapore, the UAE, Dubai, Abu Dhabi, are suddenly realizing there is, a leveraging point there, that if it's properly regulated, this subject is not going to go away. And, the utility of it is probably outweighing, is now finally acknowledged that the utility is outweighing the disadvantage.